In this video, we are going to be analysing T2 Biosystems, ticker TTOO. Now, when we covered this before, the levels haven't actually really changed all that much since the last time. So again, we did call kind of this resistance here, could play that pullback, and we basically caught this top here to play that pullback again. You can go back on the channel and check out those levels to see how they performed. But what are the key levels we want to be paying attention to as of now? So again, we are seeing a bit more buying pressure coming from here. This is because we got bought up on the 3-month anchored VWAP. What we are testing right now, though, is our 38-cent resistance. That's our first deviation from the 6-month. So we need to start seeing how we react through here. And the way I tend to do this is probably, looking on at least a 1-hour chart. If not, you could look on either a 4-hour or daily chart. And it's seeing how we react to this level. Again, as of right now, we are pulling back. That is to be expected the first time you're testing it for a fresh time. But it's really how do we react to this overall? Do we break above, come back, test it as a support and hold? If so, then we can look to play to the upside. On the other hand, if we just test this resistance, start to sell off, then again, we are probably going to continue down, and I'm not paying attention to this stock. If we continue to the downside, we don't really have any supports, so it's kind of just trying to buy a falling knife. However, if this level does break and we can hold it, what are key resistances that we can look to trade to? So again, if we're trading the kind of 40-cent support, we can trade that to 71 cents. That's basically that previous high that we created, and again, still our first deviation over on the 1 year. So that could be the target, and also from here, this is when I would be a bit more confident in starting to short the stock as well. Wouldn't want to short this 40 cents because again, the kind of risk reward is probably not going to be that great. Can easily squeeze, but again, we don't have massive amounts of downside. However, from that 70 cents, again, if we buy some protection, then it's fine if it goes against us, but there's definitely a downside opportunity back down to 40 cents, so that level should be quite nice. If we break that, we have another resistance at 90 cents. We have 145, 225, and 375 as further off resistances. So again, we have a lot of resistances, and I mean, that's what you expect with these kind of stocks. If you zoom out on a stock like this, how has it been performing? All it's been doing is selling off really since its IPO back in, I think that was 2014. So when you see stocks like this, again, I like to play the overall trend. If I'm seeing a stock sell off non-stop, I don't really want to be buying it. I would much rather be shorting it, and that's why I'm paying attention to the 70 cents and above. I'm short buyers coming into there. So again, short at 70, I'm short at 90, I'm short at 145, I'm short at 225, and I'm short at 375. So all of these levels I'm happy to be more short bias at. And again, for targets, you just always use that level below. So if we short the 145, we're looking at a 90-cent target. So again, that's really the main thing I'm looking at on a stock like this. If it does squeeze for any reason, that's my opportunity to get in and look to play that downside opportunity. And again, does have options, which is great, because if we can get some shares, again, it's hard to borrow, but normally it just means you're paying a bit more to short them. If we can short shares like this, again, it does have options and they're somewhat liquid. So we can easily buy protection, which again, if we're shorting shares, we definitely want protection, because then even if it does short squeeze or anything like that, you have a defined loss. You don't want to be risking your whole account of one trade, because again, obviously it does not make sense from a risk management perspective. So if we're shorting the shares, we're buying calls to define that risk and look to play that downside opportunity.